If you've been watching Opendoor stock lately, you'll know it's been nothing short of a wild ride, and Tuesday was no exception. After Monday's impressive 18% rally, Opendoor closed Tuesday higher again, riding a fresh wave of optimism sparked by none other than Pompliano. The well-known investor and media personality revealed he has taken a position in the stock, adding another big-name voice to the bullish chorus that's been building around Opendoor in recent weeks. The market took notice. Throughout the day, shares traded in a wide range, starting near $2.37 at the open, dipping briefly, and then charging higher to hit an intraday peak of about $2.66 before settling near $2.49 by the close. That's not just noise. That's serious momentum in a name that has already been under the spotlight thanks to Eric Jackson's bold $82 long-term price target and the meme stock-style surge that's been rippling through social media. Pompliano isn't your typical Wall Street analyst. He's a media-savvy investor with deep roots in crypto and disruptive tech, and he has a knack for rallying retail enthusiasm. His involvement doesn't suddenly change Opendoor's fundamentals, but it does change the conversation, and in today's market, narrative is often just as important as numbers. When a high-profile investor steps in, it draws attention. That attention can fuel volume, which can fuel price action, which, especially in a stock with short interest estimated between 20 and 25% of the float, can quickly spiral into a short squeeze. The setup for a squeeze here is hard to ignore. Opendoor's short interest is elevated, and recent rallies have shown just how fast momentum can build when buyers step in. Monday's surge and Tuesday's follow-through are classic examples. Momentum builds, shorts feel the heat, and covering adds fuel to the fire. What's different now is that we have two vocal, high-profile bulls in the mix, Eric Jackson and Pompliano, each with a different audience, both amplifying the bullish case. That creates overlapping waves of retail interest from different corners of the market, which can keep the spotlight on the stock longer than a one-day meme spike. If you think about other short squeeze plays in recent memory, GameStop, AMC, even smaller names like Carvana, it's not just the short interest that matters, it's the story that keeps traders coming back. Opendoor's story now has a new chapter. Beyond the short-term trading dynamics, there's a legitimate macroeconomic argument to be made for Opendoor. The Federal Reserve September meeting is shaping up to be a pivotal moment, with rate cuts increasingly likely. That's big news for any company tied to the housing market. For Opendoor, which thrives on transaction volume and price stability in real estate, lower rates could mean more buyers entering the market, faster inventory turnover, and potential margin improvement. Housing affordability has been a major choke point, and while rate cuts won't solve that overnight, they can loosen the market just enough to give Opendoor the breathing room it needs to expand transaction volume and drive revenue. In the short term, momentum from big names like Jackson and Pompliano, combined with high short interest and a risk-on market environment, makes for a compelling setup. In the longer term, a shift in interest rates could help stabilize the housing market and give Opendoor an opportunity to scale more effectively. These factors together create a scenario where short-term trading catalysts and long-term fundamentals might align. Of course, this comes with plenty of volatility. Opendoor has already seen 20 to 30% swings in single trading sessions, and the company's third-quarter guidance was soft. The housing market remains challenging, but for traders and investors with a bullish outlook, volatility can be an opportunity rather than a drawback. In fact, it's often the volatility that drives the big upside squeezes. This time does feel different. We've seen Opendoor rallies before, but they often fizzled quickly. Now, the rally is coinciding with a credible macro catalyst in the form of possible September rate cuts, multiple high-profile bulls pushing the story, heightened retail interest, and a real chance at trapping shorts who might be underestimating the stock's ability to move on sentiment. Even if you strip away the hype, the improving macro backdrop could offer Opendoor some fundamental support, which means any momentum gains might be built on slightly sturdier ground. From a technical standpoint, traders are eyeing $2.65 to $2.70 as the key resistance zone. A break above with strong volume could trigger another leg higher. On the downside, $2.30 to $2.35 has emerged as a short-term support area. Holding that range would be a positive sign that buyers remain in control. And of course, $3 looms as the psychological breakout target if momentum really picks up. Tuesday's trading action reinforced something important about Opendoor right now. This is a stock sitting at the crossroads of narrative, sentiment, and macro potential. The involvement of Pompliano adds a new dimension to the hype cycle, while Eric Jackson's bold calls keep the conversation alive. Add in the very real prospect of rate cuts in September, and you have both a near-term trading setup and a longer-term investment angle. Yes, it's risky, and yes, it's volatile. But for investors with a bullish outlook, especially those looking to ride both the sentiment wave and the macro tailwinds, Opendoor might just be one of the most interesting names to watch heading into the back half of the year. This isn't just about catching a quick pop. If the macro narrative plays out and sentiment remains elevated, Opendoor has the potential to deliver outsized returns. In a market where momentum and macro can collide, sometimes that's all you need for a breakout.